Renko charts are a great way to analyze the market from a completely different perspective. If you prefer scalping or day trading and like to analyze price action, then Renko charts are perfect to reduce noise and reveal key intraday levels. In this video, I will share a scalping and day trading strategy involving Renko charts and a specific chart pattern, and you will learn in detail how to identify potential signals and the conditions needed for high probability setups. Renko charts are great for scalping and day trading because small, noisy price movements can be hidden to uncover the things of importance, like trends and support and resistance. With the right understanding, Renko charts can produce insights that are invisible using conventional price time charts. Renko charts don't work in the same way as conventional price charts. Each point in a Renko chart is a block or a brick, and the brick is plotted whenever the price increases or decreases by a certain amount, meaning the chart only moves forward on a time axis when the price changes. Renko charts never move horizontally, they only advance up or down at the same fixed rate. And that's important because when you're actively trading the markets, scalping or day trading, it's important to have a methodology to clear out the market noise. I won't go much in detail. If you aren't familiar with Renko charting, make sure you watch this video first to understand exactly how Renko boxes work. Renko gives you a different way to view price action. Although a Renko chart contains bricks of the same size, predetermined by the trader, there are some boxes that contain wicks either at the top or at the bottom of a brick. These are the equivalent of pin bars on classic candlestick patterns. This is the pattern we will search for. A pin bar is a chart candlestick characterized by a long tail that shows rejection and indicates that the market will move in the opposite direction. The area between the open and a close is called the real body, and typically all pin bars have a very small real body and a long shadow. A bullish pin bar is known for its lower wicks, and the bearish one is characterized by long upper wicks. The same is true for Renko charts. The idea is to find Renko boxes that have long wicks. Now, trading is a game of probabilities. That's why you must evaluate your Renko pin bar setups from multiple angles. To determine whether or not a Renko pin bar is worth trading, this price action signal should respect the following criteria. A quality Renko pin bar forms near a support key level in an uptrend and near a resistance level in a downtrend. And the Renko pin bar formed in line with the direction of the market is more powerful than the one which is formed against the trend. So the formation of this Renko pattern with the trend makes it more effective. As you can see in this example, Renko bullish pin bars that were formed in line with the uptrend offered good trading entries. This is the pattern we should be taking into consideration. The bearish ones that were formed against the trend should be ignored. The anatomy of a Renko pin bar is important as well, and you have to make sure that the pattern is indeed a pin bar by looking at the distance between the box and the tail. Pin bars with longer tails are more powerful. The psychology behind the pin bar candle formation is simple. Pin bars are formed when prices are rejected. Now, this rejection doesn't indicate a guaranteed reversal signal because this price action setup can form everywhere in your chart. The most important areas to watch when trading pin bars are major key levels of support and resistance. If the rejection was near a support level, for example, this is an obvious indication that the bulls were more powerful and they are willing to push the market to go upward. If the formation of this candlestick occurs near a resistance level, it indicates that the bears reject prices and prevent the bulls from breaking this level. So this means that sellers are willing to push the market downward. If you understand the psychology behind this price action pattern, you will be able to anticipate what is likely to happen in the future, and you will make better trades based on high probability pin bar signals. Remember, besides support and resistance criteria, we aim to trade Renko pin bars with the trend. Pin bars that occur in trending markets offer good trading opportunities with high risk-reward ratio. The strategy is simple. You start by identifying a clear uptrend or downtrend, and you wait for a pin bar to occur after a pullback to a support or resistance level. This example shows how this price action signal works if it's traded with the trend. Here, the price was rejected from the resistance level, which indicates that the bears are still in charge of the downtrend. The formation of the pin bar indicates the end of the retracement move and the beginning of the impulsive move at the resistance level, in line with the downtrend. This is a high-quality setup because all the conditions are respected. The Renko pin bar is well formed and it's in line with the direction of the market, and the rejection occurred at a major key level, which represents a hot point in the market, a resistance level. Sometimes, even if the market is trending, we can't draw support and resistance levels because prices move in a certain way, during which we are unable to identify static key levels. If you are in this situation, you can use a moving average, which will act as a dynamic support in an uptrend market and a dynamic resistance in a downtrend market. As you can observe in this example, the market was trending down, and using a moving average helps us to identify dynamic resistance levels and high probability pin bar setups. In this other example, when prices approach the moving average, buying pressure takes place in the market and the price goes up. The pin bar signal is clear on the chart because the trend is bullish. The price action setup has a bullish structure as well, and the rejection from the moving average is a confirmation signal to buy the market. The entry when it comes to trading Renko pin bars is simple. If all conditions are met, we enter the market immediately after the Renko pin bar closes. This strategy will help you to catch the move from the beginning, because sometimes the price goes higher after the formation of the pin bar, and if you are not in the market, the trade will leave without you. This example shows a perfect entry. We took this trade because we had three important elements. The trend. The market was trending down. In this case, we look for selling opportunities. The level. Here we had a support level that becomes resistance. And the signal. A Renko pin bar was formed after the retracement back to the resistance level. When you have these three elements in the market, you just place your trade after the appearance of the Renko pin bar and your stop loss above the long tail. Your profit target would be the next support level in the case of a downtrend, or at least 2 times the risk level. As we are scalping and day trading using this approach, Confluence is a must for a high-quality setup. Confluence happens when many factors generate the same signal. This trading concept is used to filter out entry points and spot high-probability signals in the market. Trading with Confluence will help you focus on quality setups rather than quantity, and it will enhance tremendously your trading performance. In our case, if we are looking for a Renko pin bar signal, we need to find other factors of Confluence to confirm our entry. So what are other factors of Confluence? First, the trend. It's one of the most important factors of Confluence. This is the first thing that most successful traders look for on their charts. You can't trade any setup without identifying if it's in line with the direction of the market or not. Next, support and resistance levels and supply and demand areas. These major levels have a significant importance in the market because all big participants watch these specific areas. Moving averages could represent another Confluence factor. I personally add the 10 or the 20 moving average, depending on the market I'm trading. This trading tool acts as a dynamic support and resistance level, and it's a very important factor of Confluence in trending markets. Fibonacci retracement tool is another factor of Confluence. You could use the 61 and the 50% Fibonacci retracement to find the most powerful areas in the market to align with Renko pin bars. Also, trend lines. Drawing trend lines on your chart can give you an idea about the market direction and can help you to find the most important reversal points in the market. When you are analyzing your chart, you are not obligated to find all these levels to determine whether the trade is valid or not. If you can find just 1 or 2 factors of Confluence that come out together with a good Renko pin bar setup, this is enough to make a profitable trade. In this example, we have a high probability setup with 4 factors of Confluence. First, the trend. The market is trending up, which means that we have to follow the trend and look for a buying opportunity. Second, the level. The support level is an important key area in the market as price broke out the resistance level that becomes support and pulled back to it. Third, the signal. The formation of the Renko bullish pin bar after the retracement back to the new support level. And another signal, the rejection of the pin bar from the support level and the 10 moving average that acted as a dynamic support level. All these factors work together to give a powerful trading signal to buy the market. This example shows 4 confluent levels that indicate a powerful short trading signal. The first factor is the bearish trend, and the second one is the support level that becomes resistance. The third one is the 10 moving average, which represents a dynamic resistance level, and the last factor is the Renko pinbar formation near this level in line with the trend. If you adopt the Confluence trading concept, you will completely change the way you perceive the market, and you will start trading like a sniper by waiting for the best trading setups to come to you, instead of forcing your trades and trading without any major backup. If you learned something new and found value, leave us a like to show support, subscribe to our channel and hit the bell icon to stay in touch when we release new videos. Until next time.